Welcome to the YFP Real Estate Investing Podcast. I'm Nate Hedrick.
And I'm David Bright. We're both pharmacists and real estate investors that believe that real estate investing does not have to distract from a meaningful career in pharmacy.
Each episode, we share stories that educate and inspire pharmacists to leverage real estate investing as a part of your financial plan. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good, really good. We just finished up a really nice interview, and we're doing all the summer stuff. Everything's good. It's weirdly busy, but otherwise we're doing well.
Yeah. I know with the agent hat on, I know you've said it's a little different being a solopreneur. We're so used to as pharmacists when you take vacation leave, you're gone and someone else covers your pharmacist duties. But yeah, this is a little different with the realtor thing, right?
Yeah, and I'm such a big proponent of when I'm gone, my emails are off, my phone is off. I want to be gone, I can do that a little bit less now. I have to be a little bit attentive to that, and usually I can prep my clients hey, I'm going to be gone for a week. I'm going to be slow to respond, but even that I can't just turn it all the way off, which I'm a little resentful of, I guess. But just I'll manage. It's worth it. I like what I do. So
yeah, but at the same time, you were just telling me a story right before we hit record about flip of how you were able to leverage that with your self-management though too.
Yeah, so really kind of a cool story. Just I turned a vacant rental listing that I was interviewing prospective tenants for, ended up securing a really fantastic tenant. And as we started talking more, he said, hey, I'm actually, I wouldn't be opposed to buying a house. And so I had a listing down the road that I thought would be a perfect fit for him after talking to him for an hour. And now we're under contract on that place. So I don't want to jinx it, but it was a cool way to kind of turn a rental client into a listing client, or return a real estate client. So that was pretty fun.
That's cool. So it's not all bad. There's still a lot of value in holding that real estate license and playing both worlds, right?
Very little bad, in fact, very little bad. Just a little bit. But speaking of bad, one of the things that if you didn't catch our July newsletter, not to bury the lead there, but if you didn't catch our July newsletter about the one of the pieces in there, the article we mentioned was about insurance carriers pulling out of certain areas of the country, particularly Florida, California, disaster zones. We kind of wanted to springboard this episode off of that same idea. Can we talk about insurance, something that we talked about way back when, and only a few times in between, but something that's becoming more and more important as the world changes a little bit.
Yeah, and the insurance landscape is really shifting. I'm in Michigan, so we don't get a lot of hurricanes up here. Where I'm not, I don't know why it's really happening here. Our guest today does go into some of the details there, but we're seeing a lot of those shifts. We had a major carrier pull out. I had a friend call me. He said his rates went up $3,000 a year on his one duplex unit, and he was trying to figure out what to do because changes like that in the insurance world, that can be a big hit to your cash flow, and it can produce just a lot of instability in what we all hope is a really stable investment. And so yeah, this seemed like a great time to bring in an insurance expert to say, this market's getting wild. What do you do as an investor to protect yourself and protect your property, have insurance work for you?
Yeah, and so that's why we decided to bring back a long time ago guest, Bryan Neal. He was back with us way back in season 1, episode 14, if you can believe it. And just an excellent individual, really well educated in the space, runs his own insurance business, and just has a great pulse on what's going on in the world of insurance right now.
Yeah, I think there's still some value. We reference back to these prior episodes because a lot of the content that's shared in those is still valuable today. So for instance, in episode 14, Bryan had some tips in there about how to shop for insurance and how to get your rates down. And that was the push I needed. No, not a lot of people really get excited about digging into insurance shopping and all that kind of stuff, but it was the nudge that I needed to do that. And in shopping around for insurance, I was stunned by how much I saved in doing that with the tips that he shared in that episode. So it was a great interview then, and he shared a lot of great tips this time around as well.
Yeah, he has some really good stuff about how to look at the current market and the things that have changed. Especially if you've been holding a property for a while, like what does that look like for you going forward? Do you have enough insurance to cover a catastrophic loss? Do you have, replacement cost actually built into what you're doing? And some really good tips to look at that I haven't thought about in a while. And so it was a really good reminder to have Bryan kind of walk through those things.
Yeah. So I think this is a good reminder for everybody that whether you've had the policy for a long time or a short time, it's a good thing just to get your head above water every once in a while. Look around, make sure that you're dotting your I's and crossing your T's. So this would be a good one. After you finish listening to the episode, set up an appointment with your insurance agent and make sure you have the right coverage for you.
Yeah, I like it. All right, with that, we'll take you to the episode. Hope you guys enjoy. Hey, Bryan, welcome back to the show.
Hey Nate, I appreciate you guys having me back on.
Heck yeah, man. We were looking, just David and I, before we started hitting record here, that we had you way back on episode 14. So it's been it's been a minute, I would say, over 2 years now. So we're excited to have you back and talk more things insurance and hear about what you've been up to. So maybe for those listeners that might have missed that early episode way back in season one, maybe give us a little bit about yourself and just a few things that might have transpired since that last time you were with us.
Yeah, so my name's Bryan Neal. I am an insurance agent by trade, which ultimately has evolved into being a business owner. So I got into the industry with honestly, just the more I learned about the industry, had a passion for it, and then it's just evolved over time into business ownership, and that's honestly has become my passion. Obviously, love insurance. It's a always evolving game, always something to learn. It's challenging on that front because it's always changing, and there's always something else to tackle, learn about. But yeah, so I live in Central Arkansas. Uh, been a captive agent, so worked for State Farm, have worked for Farm Bureau, and essentially, realized that that model was just not great for the customer from my point of view. Nothing wrong with the carriers at all or the companies, both very good companies, just not a great business model for the customer. And so in 2018, me and another gentleman decided to start an independent agency, which just means we essentially go out, create those relationships with carriers, and then when a customer comes to us, we have multiple options as opposed to just one option. And so we started that in 2018, focused primarily on small investors, working with small real estate investors, and a lot heavy personal lines, so home, auto, and then the guy who owned maybe one or two rental properties made up a lot of our book of business at first. A lot of fun, great agency. Had some goals for wanting to try to scale something and try to honestly, as I fell in love with the business side of it, the idea of scaling and just people, and that led me to start another agency 2.5 hours away from where, or 2 hours away from where I live, and try to tackle scaling that thing while I don't even live there. And so that started in 2021. I sold the agency in Conway in 2021 as well, towards the end of 2021 to my business partner, and have been focused on this one ever, since I guess the end of 2021.
That's a great recap. And I think it gives some perspective of how much you've been up to. I think for those that are listening that might not even know the difference, right? Just to kind of get to like insurance 101, can you briefly explain the difference between single carrier agent and an agent that shops multiple carriers? I think that might be clear to some, but not to everyone.
Yeah, no, great question. So there are a lot of different, you call it single carrier. Like on our end of the business, we call it a captive
Hmm.
agent or captive agency. So someone that works for State Farm and used to Nationwide and Allstate. There were a lot of captive agents or captive carriers, which had captive agents. And over time, like Nationwide, they are no longer a captive agency. So anyone that was captive with them was forced to go independent at some point in time. But
Hmm.
someone who works for State Farm, when a customer comes to them, they can only offer State Farm products.
Mhm.
when I was an agent with Farm Bureau. Great, great carrier. They're all run state by state, um, for the most part. But when a customer would come to me, all I could offer was a Farm Bureau product. And so what I found a lot of times was trying to, squeeze like a square peg into a round hole.
Yep.
I, I just didn't really enjoy it, to be honest with you. Didn't enjoy from a customer standpoint, it just didn't seem right. And not that anything like unethical was happening. I just wanted to be able to offer the best option for the type of person that I wanted to work with, which was, real estate investors and somebody, you know, people that were more like me. And so,
Mhm.
anyways, uh, on the independent side, we'll go out and obtain multiple contracts with Progressive or Nationwide or Allstate, and and then a lot of other carriers that have no national advertising or local advertising, and sometimes those are the best. Um, but we'll go out and get a contract with all of this. So when a customer does come to us, um, we will potentially have something that helps them out. And so, really, what you want to do as an agency is pick a lane. And so, some things that you want to specialize in and be good at, and then align your carrier relationships with carriers that also want that type of business and maybe specialize in that type of business. And so, you can really be a specialist for people who own hotels per se, or are in the home
Mhm.
healthcare industry. And so you have more options which you can be super flexible with, or you have more options that you can honestly line up 5 or 6 great carrier relationships and work specifically with people in certain verticals or niches.
No, I
Does
think
that
that's a super helpful distinction. Yeah. And I remember you walked us through that back on episode 14. And it was a few weeks after that that I got on the phone and started hunting around because I was with a captive agent. And that tip that you gave us in episode 14, I have to thank you for that one because I quite literally have saved thousands of dollars a year in reducing insurance premiums. I got with a new agent that put me with 5 different carriers for different things that we're doing. And really a huge saving. So I think that people that are looking into that discount and shopping around, that there is a lot of value in shopping and having that nuance in their insurance plan. So I appreciate that.
Oh, awesome, man. Yeah. And I think one of the bigger benefits too is that as you create that relationship with, whoever your agent is, if they have more than one carrier, as the economy changes, as the market changes, like we've seen over the past couple of years in the insurance industry, they have different options to take you to. So you can maintain their relationship with that advisor or insurance agent, and not have to swap to somebody else just because he doesn't have another option for you. So I think that's one of the huge benefits. But I will say this too: on the captive side, or carriers like State Farm, great carriers, and sometimes they are the best fit depending on what you're looking at, what type of business or type of building it is, so that
Mhm.
not that they don't have their place, they definitely do.
Yeah, one of the things that you touched on as well is that insurance rates have been changing, and they've certainly been going up in recent years. Nate and I are big into spreadsheets, and we do all our deal analysis that way. And as I look back at the rules of thumb that I had for insurance in a spreadsheet 3 or 4 years ago, it just doesn't seem to apply anymore. I need to bake more into my analysis for reserves for insurance. So, can you help us with what's been going on in the market for the past few years that's caused insurance rates to go up so much?
Yeah, so really there's been a lot at play. You kind of have to go back to 2020 and COVID. And during that time, nobody was driving. Your carriers, a lot of your carriers came out and started taking rate decreases on the auto front for that reason. And what they didn't account for was the hyperinflation that everything was about to go through on the back end. So they went into a climate where typically your insurance rates should increase every year about the same rate as inflation. And so they not only took a decrease then on a lot of products, but then you had inflation, and then they tried to play catch up. And along with inflation, was also paired with supply chain issues. So
Yeah.
the ability to get a product, let's say to build a home, was that all of a sudden a 2x4, you know, was twice as much as it was the year prior. And so
Yep.
price of wood went through the roof. And then labor started going up. And so it's kind of been one of those things across the board there as far as the cost. And then you pair that with unheard of catastrophic losses in bad weather, coast to coast, and it was just really a perfect storm. And so they've been trying to play catch up. You have a lot of carriers that have either gone bankrupt, especially some smaller regional carriers who awesome, fit a perfect role. You've had some carriers pull out of states, large national carriers that say, hey, we're not going to do business in California anymore, or we're just not going to write homeowners policies at all, coast to coast. And that simply comes down to the profitability. And so a lot of them haven't been able to catch up. And then when those storms, year after year have continued to hit, it's just put a huge financial strain on them. And so they've tried to raise rates fast, but some of them haven't even been able to do it fast enough because it is all regulated still by, the state and government. And they can only have a rate increase that is approved by that state's insurance department. And so some of them weren't able to get rate approved fast enough. And so it's just honestly, it's created a massive mess. And then on the consumer side, all you see are all, and me, I'm a consumer as well. I have an Airbnb here in town. For 3 years, we paid $2,500 a year. And this year we got a renewal and it was $6,500 a year. And there's literally nowhere else to go with it. Um,
Wow.
yeah. And so as a consumer, that's all we see, and I am I'm on the insurance side of things. You would think I have control over it being an agent, but yeah, I do not. I do not.
It's crazy. And, you're talking about the carriers pulling out. I've heard more and more stories about that, especially in areas that are hit by storms more frequently or earthquakes or things like that. And it's astounding. And then you couple that with the inflation and the rise in property values that we see, and it just feels like everything's going up with no like good story to be had from there. I mean, like what are some things that you're saying to clients in those locations, like stop buying there, or here's a way to mitigate that, or like what's the like, give us the good news in this, right, Bryan?
Well, the good news is, no, I don't know. It is has been a constant conversation. I mean, every day you have the same conversation with somebody, and it hasn't gotten easier. It's
Mm,
not a fun conversation to have, and it is, hard to explain. But no, I mean, there's nothing that we've done as far as advising people not to buy in a certain area.
sure.
Now, has it slowed things down, or have I seen insurance become the roadblock to somebody purchasing a home? Most definitely, which is
Wow.
honestly mind blowing because
Yeah.
I have not experienced that to this point in my career. But there's, you know, I've seen several instances where, the house just wasn't even insurable due to the how tight everyone has gotten in their underwriting. And so literally these individuals either they couldn't get the proper coverage that they needed to close on the loan. So it just wasn't even an option to buy it unless
Mm,
the person that was selling it did a lot of updating. And so, um, which in every scenario, there is always typically a way to solve it. Which once again, that's why I like being on the independent side because I say if it can be written by anyone, we can find somebody that will do it. So it's just those really rare scenarios that it can't be. But
Mhm.
sometimes you just have to get creative and find somebody that is okay, riding that home with a 30-year-old roof that has a ton of algae on it and moss growing on it, and the
Mhm.
person buying it has no plan on updating it. You know,
yeah. What about the people that are holding onto a property they've had for a while and the value has gone up? I mean, is this something where I should be going back to my agent and saying, "Hey, I've had this house for 5 years now, right? It's worth double what I bought it for." Maybe
Yeah.
we've seen that in some areas. Should I be going back to that and trying to get higher insurance coverage to cover that increased market value? Is that something that's happening automatically? What do I look at there?
Yeah, great question. So, depending on the policy and depending on the carrier, some of them will increase annually. Every year, they'll have an automatic 2%, 4%, 6%, something increase. Now, with the way we've seen things, sometimes that still isn't enough. Um, but so some carriers will do that. They'll automatically increase. Some won't. And so what we try to tell our customers, one, we try to review it every year at renewal for them. So we want to make sure that everything is, up to date as far as the coverages and that it is keeping pace with current replacement cost. Because if it's not, not only, let's say that it costs $380,000 to rebuild the house and it's insured for 280.
Mhm.
Um, yeah, they would still get the 280. Let me take that back. You may think that, hey, they would still get the 280
Mhm.
if something were to happen. But if there's like a partial claim, the real problem would be like a partial claim. They could find themselves in a co-insurance, you know, clause
Hmm.
deal, and it would just, which is a whole nother, we could, you know, get rabbit trail down that. But there's a lot of problems with it. So realistically, what needs to happen um, is make sure, I guess, one, that ultimately insurance is insuring it for the reconstruction cost. So that
Mhm.
typically is not going to be the same as the market value. So we, like us insuring homes in Nashville, the market value of homes sometimes maybe double or triple what it actually would cost to just rebuild that home right there on the lot, because a lot of
Mhm.
the value is in the land. So that is, if it's just the market value going up and not the construction cost, then that's one thing. But construction costs have gone up, and it is something I would revisit or make sure that my agent is just keeping an eye on.
Yeah, I think that's super important, especially we're talking about all this catastrophe out there, right? Like, I mean, you don't want to think about what it would cost to replace that home, but it's even worse if your $500,000 house gets blown over by a storm and your insurance carrier gives you 200,000 to rebuild it, and it's half of what you need, right? I mean, that's about
Exactly.
as bad. Then why even have insurance, right? So, I think it's worth bringing that up just to make sure people are keeping that on their radar.
Exactly. Exactly. And then as it increases, obviously, you know that the premium is going to increase as well. And so,
Hmm.
um, just one of those things you, as an investor, you kind of have to just weigh it out,
Yep.
and make sure that's going to make sense, which I think you've seen a lot of turnover, honestly, in our area, in some instances, just due to the situations. Prices getting hard to insure it and expensive to insure it, and it squeezes cash flows because rents haven't gone up
Mm-hmm.
as fast as the insurance has
Hmm.
in our area anyway. So
Yeah, no,
creates
it makes
problems.
sense. Yeah, it seems like one of those other problems that kind of comes with this that's I hate to call it a problem, because as you grow in your investing career, your portfolio will hopefully expand as you pay down properties and they appreciate. Hopefully that means your net worth is expanding. So it's a great problem to have, but the problem becomes like then that can change your insurance needs over time, right? Whether that's liability coverage or an umbrella policy, or are there things that someone should think about as they move through their investing career and gain more properties and gain more complexity in their investing? How does that impact their insurance needs?
Yeah. We always say, hey, in the scenario that you talked about, $500,000 house, it has a $200,000 payout. That's a bad day. You lose $300,000.
Mhm.
That's a bad day. But if you get sued for something
Hmm.
and you don't have enough coverage to pay for that lawsuit, and they max out your liability limits, and then they come for your assets or the assets that are in that LLC, then that could honestly be a really it could ruin your life. I say ruin your life. That's strong, but it could make it would be tough. So one is a bad day. Liability could really ruin your financial future, depending on the lawsuit. And so, as there's a lot of different ways to protect against that other than just insurance. It is one layer to it. I would always suggest, and we work with the local attorneys that we can pair, our newer investors with to help them do things, such as creating a different LLC, etc. But yeah, as revenues increase, cash increases, and your equity in those properties increase, you always want to make sure that your liability is at least equal to your assets. On the personal line side, we always say, hey, 5 years of income, 5 years of your household income plus your net worth, because typically you find yourself in a lawsuit where that is what an attorney could come after, because if your assets aren't enough to pay for it, then they can garnish wages. And so as an investor, a lot of it, is going to be about equity and cash flow. And so as that increases, you need to visit with your agent and make sure that everything is adequate.
You mentioned the LLC. I kind of want to jump there really quickly. Is that something, if I'm making that change, it sounds like the answer is yes, but I'll ask it anyway, just to be clear. If I'm making that change, like let's say I bought a property years ago and now I'm rolling it into an LLC, years later, I've had an insurance policy with you for 3 years and now I'm ready to roll it into an LLC. Do I need to change that policy with my insurance carrier or just like let it float and figure it out the rest later? Like it sounds like we should be having that conversation across the board. Yeah.
Yes, please don't let it float. Please don't. No, you definitely need to, because an LLC, and it's its own entity. That's what's separating that entity from Nate being sued. And
Right.
so, if this other entity owns the property, it's the one that needs to be listed. Now, there are, depending on who your agent is and what type of policy. So that it could be like on a personal lines form policy. And it would be as simple as honestly adding the LLC as an additional insured.
Mm.
Or if it's on a commercial forms policy, the LLC would be the named insured. And that is, as you grow, that is the preferred method of writing the policy, is the correct method of doing it, or insuring the, rental properties, is doing it on a commercial form with the LLC as the named insured. And yeah, definitely update somebody if you've got a couple of them sitting out there, Nate. You got to tell somebody.
I got you. I'm good. I feel like it's worth clarifying. I don't want someone else to get burned in a space where it feels like one more thing to do, but it's one more thing you absolutely should be doing. So just a point of clarification.
Okay, good.
Yeah, I guess one other question that often comes up is, so if I'm an investor, I'm going to be hiring contractors to do this work because I'm a pharmacist and I'm not an electrician, right? I'm not a plumber. You don't want me doing that kind of work. I'm going to need to hire professionals in order to maintain properties over time. As you hire folks like that, what are the things you should look for from an insurance standpoint? Like years ago, I hired someone to take down a tree, and this tree was like feet away from the house. And I thought, this is going to be a really bad day if that tree comes down and goes through this house, right? So, what are the things that I should be looking for from an insurance standpoint that a contractor would have? Or do I need to insure against those kind of things? Or how does that work?
Yeah, that's a great question. So, ideally, you're hiring a contractor who is insured. So you do want to make sure that they are insured.
Mm-hmm.
So that's step one. Make sure that they have insurance and that they're licensed and probably bonded as well. So those three basics, like, hey, licensed, bonded, and insured. Want to make sure those things are there. And if you want to take it a step further, let's say you're hiring somebody to build a back porch on a house or whatever it is,
Mm-hmm.
you can have them provide you a certificate of insurance. So it's something that contractors do on a regular basis depending on the job. Their agent would actually send you a certificate of insurance showing that they do have active insurance.
Okay.
And then if you want to take it a step further, you could even get a waiver of subrogation, or you could be a named additional insured on their policy. And so basics, licensed, insured, and bonded, which they love to advertise that. Um, and and then I would practical make sure that you get a certificate of insurance, and that their insurance is active. So because what their insurance is going to do, let's say in that they build the back porch, your tenants walk out there, they immediately fall through the back porch, they break their leg. Instead of you being sued, it's going to fall against the liability policy of that contractor as completed operations. So make sure those things are in place, and you should be good.
I love it. And I think it's something that we're often not going to do, right? I know the people that are out in this business, and a lot of times you're going to say, "Well, I'm hiring this guy," and I asked if he's insured, and he said, "Yep," and that was kind of all I did. But I think it's really good to check that actual paperwork, right, and actually see if their policy is active. And I mean, is it something where I can call the insurance agent and say, "Hey, I'm hiring David. He says he's licensed with you. Like, is he still insured? Is he still have a policy?" Is that a reasonable thing to do, or is that getting too crazy?
No, not crazy at all. I would feel completely comfortable doing it. Like I said, most contractors, if they are doing, they're doing things right, they've had to offer a certificate of insurance numerous times, and so it is nothing that they should get upset about, and it's something that they have to provide all of the time. So you could simply just ask them, "Hey, would you be able to provide me a certificate of insurance, uh, so I have it during while you're working on XYZ?" So nothing that I'd be afraid to ask them.
Perfect. I appreciate that.
And I guess one other thing is someone continues through their investing career is, as they get more and more properties, hopefully that means they're expanding their cash reserves. Hopefully that means they're expanding their insurance. One of the things that I've heard recommended over time, and I'm curious your take, is could it make sense to increase the deductible on each property over time, where someone's effectively self-insuring against the small stuff and relying on insurance only for the really big, more catastrophic things?
Most definitely. You guys love spreadsheets, and so
Yeah.
and honestly, that's what it's about. And so plug it in, and the more that you can self-insure, and the more that you're comfortable doing that, it obviously it's going to lower your insurance premiums, and you can decide to do that. I typically will advise, even on small stuff, there's no need to have a $100 deductible on your vehicle if you have a lot of cash sitting in the bank, or even cash that's easily accessible to cover small things, because you're just paying for insurance that you may or may not use, and you're paying a higher premium for it because of the low deductible. So as your cash reserves and financial situation improve, that is something that we always want to sit down and discuss that with each of our customers, and make sure that, hey, give them the scenario. Hey, what does it look like if you bump these to a $5,000 deductible, $10,000 deductible? And I'm not going to make that decision for them, and only they truly know their financial situation. But if it works out on the spreadsheet, and uh, the nobody knows if it's going to storm or not. But at the
Mhm.
end of the day, if you have the money in reserves, I would not hesitate to raise deductibles.
Bryan, these are awesome tips. I'm glad we're hitting all this stuff. I think there's a lot in here that hopefully again, hopefully old news to people, but if not, a good like jolt to say, okay, good, I got to look at this stuff, which is exactly what having you on is so great. You mentioned at the very top that you've obviously been growing a business while doing this. It's not just about the insurance side of it; it's the business side. So I want to roll to our final infusion questions, because I think it'll give you more insight about some of that business mindset that you have. So these are three questions that we ask every guest on the show. And the first one is, what's one tangible strategy that you use to make sure that you're effectively working on your business rather than being stuck in your business?
Yeah. Very hard thing to do. Like we said, earlier, that is a constant battle. It's easy to get sucked into the whirlwind of the day. And so what we have, or one tangible thing that we've started recently, we picked it up from somebody wiser than us. But I have a weekly activity dashboard, and so it's in an Excel, and I have 6 quadrants, and in those 6 quadrants, I'm putting the things that are most important to move the business forward. So not things that I'm going to do in the business, but things that I'm going to do on the business to move the business forward. And so as I go through my week, I that is something I'm going to, hey, schedule time for every morning, is to look at that and go, hey, what can I get knocked out, or what can I give my whole day to make sure that these items are done? Because I know at the end of the week, these are the 6 items that are going to actually move the business forward. Where sometimes, just showing up, doing the day to day, it feels like you're moving the business forward, but it's kind of false. And so I have to I have to constantly check on if anytime I find myself doing something, I'm like, hey, why in the world am I doing this? Like, we have somebody way more skilled at this than I am, and they love it, and they literally are paid to do this. So, hey, I hand it off to them. They're going to be way better at it than I am. They're going to have a whole lot more joy in their heart doing it, depending on the task, anyways. And I got to fight to get back to, hey, knocking out that activity dashboard. It's my North Star during the week.
I like that a lot.
Yeah. Second question is, what's one resource that has been most helpful to you in your business journey or your real estate journey, whether that's a book, a podcast, a person, author, website, whatever that would be?
That's a great question. I wouldn't say that it's been any particular person. I think I've been, or resource. I kind of drink from a lot of different faucets,
Mm-hmm.
but I do, try to make sure that the content is good, and it's not, it aligns with what I'm trying to accomplish as far as. But I think at the end of the day, like, it's just been people in my life. So the Lord has blessed me with awesome relationships and people that I've learned a ton from. But because back when we first started, I was just getting into, the investment property game, and really was still new into owning a business. And a lot of that started just due to people that I was introduced to or met, and how they influenced my life, and opened my eyes to, why am I not buying investment properties? Like, it kind of only makes sense. I don't know. And then they made it, they explained everything to me. And so it's just been a lot of awesome relationships, not one particular area.
I love that. And what's one piece of advice, if you can go back and look back at when you got started, what's one piece of advice you give to somebody that's contemplating a start in real estate investing?
Yeah, I would have bought like 10 years ago. So
Make a time machine. That's my advice.
exactly. Like, when I didn't think I could have, when I literally couldn't have bought anything, I would have tried. Like, I would go
Mm.
back and tell my college self, hey, you've got you and a bunch of buddies are paying rent. And so why are they all not paying rent to you? Like, y'all could easily cover something. And so that's it.
I
But
love
would have bought it sooner. And I think too, it's like, I know this is more than one piece, but I think a lot of times, like, depending on the personality, we can, we analyze way too much, and all the what if this or what if that. And I think sometimes, depending on our trade, we may be more naturally analytical, like an accountant or an engineer. And so sometimes you just talk yourself out of ever doing it because you're always thinking of the what ifs. And I was also in that boat of, well, what about this or what about that? And ultimately, like, once you get into it, it's not as scary as I thought it was going to be. Yeah. I don't have, no, nobody's burning my houses down or throwing crazy parties or, well, I've had a couple but overall, it's been fine.
That's all we're looking for, is just mostly fine.
Exactly. Mostly fine.
Last question is, I know that you've, with the selling the agency, starting the new agency, the work that you've been doing, you cover certain states with your work. And so if people are looking for good insurance advice and to learn more from you, where can people find you?
Yeah, they can, honestly, our website's the easiest way. So treblestone.com. It's TREBLESTONE.com. And right now we are focused on Arkansas and Tennessee, and hope to expand in the future as far as, to other states. It's not a real hard process. It's just more about, allocating marketing to make it worth, expanding. So that's how they can find us.
Awesome, Brian. We'll make sure to put that in the show notes. And again, thank you so much for joining us, giving us some awesome insights and great stuff to think about. And just appreciate your time and expertise. It's been great having you.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard in today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with us, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group.
As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content of this podcast is provided to you for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in this podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with their financial advisor with respect to any investment. Furthermore, the information contained in our archive newsletters, blog posts, and podcasts is not updated and therefore may not be accurate at the time you listen to it. Opinions and analyses expressed herein are solely those of your financial pharmacist unless otherwise noted and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer.
Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.